Victor Yaw Asante is a household name in the banking sector. Despite starting his career in the fast-moving consumer goods space, he soon made a name in the banking sector, working from Universal Merchant Bank, Standard Chartered Bank, and now First Bank of Nigeria. We are here in his office to understand what it is to be a bank MD when a pandemic is happening, what his bank is doing to ensure that it mitigates the impact on both customers and the bank, and then what he makes of the central bank's policies regarding the pandemic. Mr. Yaw Asante, welcome to Banking and More.
Thank you very much.
Yeah, you are 1 year into your appointment here. How has it been?
Oh, it's been a very interesting journey. Fantastic. As you may know, FBN is a subsidiary of First Bank of Nigeria. It's a bank with a huge heritage, 126 years of banking, and therefore very well known, at least in Nigeria and other countries. So as you can expect, there's so much knowledge and so much depth and so on. So my role has basically been to continue the journey of ensuring that the bank is well anchored in Ghana, since it's a fairly late entrant, one of the most recent markets that it entered, the group entered. So it's been a very exciting journey, trying to navigate the Ghana-Nigeria corridor, and also as well as getting to know and to become close to a very big and good crop of Ghanaian up-and-coming talents and so on. So it's been busy, very busy. Very busy.
You talk about the Ghana-Nigeria corridor. We'll return to that, but 1 year into your appointment, a pandemic is happening. Has it interfered with your vision, with your plan for the bank?
Absolutely, it has, like no other. I mean, we weren't expecting that. Quite a number of things we had ruled out and so on were also physical. So it meant that we had to adapt very quickly. So pretty much we had to touch everything that we were thinking. When we started the year, I think remember we started with a walk at Thanksgiving as usual. We had walked, we had planned how we do our year. We had gone for the usual kick-starting of strategy meetings and discussions. And then we were rolling out plans, and then COVID-19 happened. So everything had to change. So yes, it did affect a lot of things.
Which aspect of the business, which aspect of your plan has been interfered with?
Well, to start with, COVID is very different because it could take lives, and that was dramatic. I mean, anybody who's been a business leader will tell you that you always face challenges, but there's never anything like, if you're not careful, you will die. So that was a game changer. So we needed to be sure everybody was safe, staff, customers, everybody was completely safe. It wasn't something you could dilly-dally with. You couldn't make mistakes, you couldn't take chances, and you had to immediately stop the music, literally, to try and ensure that everybody was safe. So that was the first thing, and to ensure that everybody was safe meant that we had to understand the protocols, we had to implement without delay all the things that were recommended, change the way we branch, change the way clients come in, made sure our staff understood what their responsibilities were, spend quickly on areas we weren't going to spend on.
Talking about leadership, one of the challenges that this pandemic is bringing is to test the fortitude of leaders. When it comes to the banking sector, how should MDs respond?
Oh, I think it's not just banking. Any MD at all ought to respond by first making sure they saved the lives of employees and customers. And then, of course, you go to the business of making sure your business survives. Because at the end of the day, if your business didn't survive the era, you won't come back to anything. So first things first, make sure everybody was safe, and then make sure the business was safe. And it's usually first principles. I mean, profit is revenue minus cost. So if you are making sure your business is safe, all you had to do was to make sure either your cost was contained, if your revenue was not coming, or your revenue was still assured, and therefore once you take cost out of revenue, you still have something to show for it, or even if nothing at all, try and break even, stay above water. So it was, in terms of the business outcomes, it is still first principles, but in terms of the the unusual, the extraordinary requirement to lead people differently, people who were scared for their own existence, was different. And nothing prepares you for that. I mean, pandemics come once every 100 years. So business schools, simulations, all the preparation we've had for decades trying to prepare for positions would not tell you that there will be a day where these will come about. What it knows is that it will tell you that sometimes you have unknown unknowns. I mean, and this was a typical example of an unknown where you didn't have immediate references to do at all.
These measures cost, and some of them mean losing revenue, like you talk about the rescheduling of loan payments and all that. Averagely, how much do you think you lost to it so far?
We are still counting, and all I can say is in percentage, then we probably, if you look at the run rates, maybe people shaved off maybe 10-20%. Hardcore, but the other aspects, remember that we had to spend also comes in, because like I said, our costs went up. There are things we needed to put in place immediately, apart from the revenue we weren't making. First of all, our productivity will go down. Staff couldn't work as productively as they are, so 50% are probably at home and they are not ready. So that will cost us. The things we need to put in place also cost us. And then we had to shave some interest from some of the offerings we had that cost us. Rescheduling of loans per se didn't cost us, but it meant that it would delay revenue and so on. Of course, people couldn't trade, and all of a sudden the airports were shut and airports were silent, and trade had gone down. So all of that meant cost. Of course, there were also opportunities. There were few opportunities that came up. And for example, there were industries that all of a sudden needed to move very quickly, like the manufacturing bases that focused on things like sanitizers and so on. So opportunities had been created for people suddenly who needed to move in. And as a bank, again, one of our responses was to make sure those that needed to move, pharmaceuticals and so on, that needed to move quickly, which were not just because of business reasons, but because of health reasons, we needed to support them quickly, and we did also some of these things. Yeah.
This is still banking and more, and we are trying to understand how it is managing a bank during a pandemic. Our guest is Mr. Yaw Asante, Victor Yaw Asante. Victor Yaw Asante came here in July last year, and he's been trying to put things together and make the bank stronger than it was. One of the things that we saw was the Bank of Ghana intervening to provide a leadership role for you, the institution's irregulars. And it introduced a couple of policies. One, from a player perspective, how effective have they been?
So there was a recognition by everybody that this was different. So it wasn't, we weren't worried about what the central bank. In fact, we were in tandem. There was a lot of meetings with the central bank. We put sometimes, even the Ghana Association of Bankers put together working groups to come up with ways of doing things and suggested to central bank. Some of them suggested from central bank and so on. So we're on the same page and there were no issues at all. So the only some of the things that we needed to agree on was how we recognized non-performing loans and so on, because like we say, we didn't even know when the pandemic, in fact, we don't know when the pandemic is ending. We don't know when some people are going to come out of this. And let's say March, the fact we started in March, let's say 6 months down the line, we are still here. And we don't know. Sometimes, as they say, it lasts 12 months. It could last 36 months. We don't know yet. All we know is that we now have a slightly better grasp of things, and people have calmed down, and we can now plan better and so on. But to be very honest, we still don't know where this will end. So it's still work in progress. So we are continuously working with Central Bank on the areas we can improve and the areas we need to sharpen to make sure that the impact, if at all, is minimal. So we've so far worked very well with Central Bank. And I don't think there have been any major issues at all.
One of the expectations from the Central Bank with regards to the policies was to increase liquidity in the system and then ultimately push that into the private sector for the economy to come up at least quicker than before. But the central bank reports show that even though the liquidity has gone in there, it's not going to the private sector. Rather, a chunk of it is going into investment and all that. And that to an extent is understandable, but it kind of defeats the purpose for which the central bank tried to release the liquidity into the system.
No, central bank has been actually monitoring a lot on whether we are releasing liquidity, and two, what we are using it for, and that is something they've tracked and are working very closely with banks. So first of all, it's one thing releasing the liquidity, and it's another thing finding where to put it. So there was a lag. So even if I wanted to help a pharmaceutical company, I needed some time to do it. So you won't see it immediately. It will take probably a month for it to come through. So some of the things are delayed, but I'm sure when the next round of reporting comes, you will see that it's shifted and that has happened. The liquidity is going back. Speaking for myself, as my bank, if you notice, we grew assets and advances by about over 200% year on year, if we see our June. So it tells you that we have moved aggressively into giving facilities out and so on. So speaking for myself, no, we actually deployed quite a bit into the system, and we identified people who needed funding, and we did just that. So those that didn't do it, I suspect they needed some lag time and so on, but it will start appearing in the next quarter report that we'll probably have at the end of September.
Yeah, I saw your advances, and it really grew by over 280%. And I saw that to be kind of a misnomer, so to say, something that is out of the norm given the circumstance and all that. What was the drive? Which areas benefited, and what should we expect in the long run?
So we came from a small base, which basically meant that we hadn't done as much as we could. But notice that we're just making sure we're ready. So we're doing some internal stuff, and once we are done, we now could do better than that. So it's just a matter of timing issues, trying to understand which areas we could play, where our strengths are, making sure our systems and so on were ready. And then once we did that, we're able to start lending. You remember we brought in quite a bit of chunk of money also in the last 2 years when we had to change our shareholding and so on in terms of our stated capital. So it meant that we had enough more money to lend. So once we had more money, all you needed to do is to plan around where you wanted to deploy it, and once we were ready, we were able to do it. And that's why our base has gone up. It's a bit of all these things coming together. Also, perhaps also because I've been in the market, I know the market, I know where growths are. We are focused a little more and try to make sure we grew our niches. If you notice, we are primarily a medium-sized trade bank, and therefore what we've had is to have engagements around how we could partner some of our clients to move them, and we've done that. We expect to continue growing at a faster rate than the industry in terms of growing our asset base, like I said, because of where we are coming from. And so you will continue to see this, and it's a promise I make to our clients that we'll continue to grow with them.
The other concern is, as banks strive to create assets, issues of non-performing loans will come in given the circumstance. What measures, speaking broadly, what measures should banks put in place? What measures are you putting in place to ensure that this robust creation of assets doesn't come back to haunt you?
Exactly, and it's always the concern of any bank once they are put in. So there's an institutional framework where there's already, so one of the things you notice is that the whole entire banking industry is working very hard to try and make sure the environment enables more growth in assets. One of the things, for example, Central Bank has done well is the collateral management administration and so on, where we now have a way where all banks can go into the collateral registry, register, realize, and so on. Because when people know that when they default, we'll go after these things is very important. So that is also working well. Now, structuring is very important when it comes to, because trust is good, but control is better. And one of the things we've come to realize is that even when you are giving facilities to people, you have to make sure you have a hand on their operations in one way or the other. So if you take a typical trader, you don't just come and say, give me 300 million, give me 1 billion, and I'm going to bring goods. No, you don't do that. First of all, you tell me, you structure it a little bit more. Who are you giving it to? I give it to the person direct. When the goods come, can I control it? So there are all sorts of structures on the way to make sure people do what they say they will do, and then once they've done it, they come back and pay for it. Because at the end of the day, as a bank, remember, you also have a responsibility to those who put money here to make sure when you give loans out, they come back for you to give back to the deposit holders. And thankfully, with the sanitary system we have now, with the improved regulatory framework we have now, everybody's playing hard to make sure we do the right things. And I think the banking industry is better for it. So we are focusing on structured facilities a lot. We are focusing on ensuring that this advisory service is very good for our clients. We are making sure controls that go from disbursements all the way to repayments are all well structured such that we don't have defaults the way we used to.
Okay, the Bank of Ghana said that it expects the economy to be stronger than it initially forecast. Is that what you are seeing based on your interactions with customers? And
it's absolutely correct. So the focus was very there at the beginning, where we thought we'll probably grow 1.5 instead of 6 and all of that. But at half year, as you can see, and banking performance is always a good indicator of how the economy is doing. And even though banks didn't probably grow at the same rate as they are, all the indications were okay in terms of the fact that it was not as bad as we thought it would be. It's also giving people the chance to pause and strengthen how things are done, because sometimes renewal is also good. So all these 3-6 months that we've not been able to chase the world relentlessly, we've also now had time to build our systems, invest more in our digital platforms and so on. So we are ready. So by the time the world opens up as we expect, symbolically we are even opening our airport up and so on, tells you that we will be ready in terms of many other ways that we need to do, partner our clients to do. So I'm optimistic. I think it's not been as bad as we thought it would be. Thank God for it. But we must stay focused. We must make sure we don't slip. We must observe the protocols, and everybody must play their part very, very diligently to ensure that we come out of it completely.
Okay, banks had accumulated a lot of capital through the recapitalization, which you alluded to, and it just at the point where they were about to deploy that capital, this came in. What would be the impact?
From what we've seen of half year, it wasn't too bad. When you have capital, you can deploy it in lending. You can also improve your own capacity to bank better. And we keep talking about the fact that banks need to improve their platforms. So I think banks we're all building in terms of all enable. And fraud issues and all of that were significant. So we needed to make sure you were building all these other unseen things. Even our business continuity plans and so on, we have had to enhance it. And those are the things that the public doesn't see. So right now I've had to invest a lot in BCPs that are cyber related, that are making sure that what is the next, because all of a sudden I know that there's a possibility that I have to evacuate all staff, or I can lose only 30% here. So what do I do in the next, what if it stays with me for 36 more months? So now I have to invest in other areas I didn't expect to. So the capital has become very handy in making sure we are able to do these things robustly, apart from the things that are usually more visible to staff, like branches and all of that. So we have deployed into making sure your banks are more robust than they were previously.
You are one person who has virtually gone through all the banks symbolically. So from UMB, which is a local bank, then Stanchart, then I think Barclays.
First National Bank.
First National, exactly. And then you are here. So tell me, how is the experience like working with, let's say, a European or an American bank, working with a local bank, working with a Nigerian bank?
Well, it's different and it's the same. At the end of the day, you still have to deliver your custom to your clients. And banking is banking. The difference will come in maybe management style or approach or strategically. For example, UMB was street focused and yes, it was local, and therefore you tend to see quite a number of our local entrepreneurs who play in there. Stanchart is multinational, and I had the privilege of working in other markets like London and Botswana. So it exposed me to different ways of doing things, and you always speak different things. First National Bank is a South African-owned bank. Again, it was a regional bank that had a strong focus in capital markets and so on. And then we have my current bank, FBN, which is also a regional player, more with West Africa and so on. At the end of the day, everybody wants a return for their investment, and that's a language of everybody. It is just that sometimes the approach is different, but I see it, everybody focuses on how to deliver great management and therefore great return to the shareholder and a great management to all your staff and so on. So yes, there are differences, but it's still management and leadership that takes you through.
FBN is a mid-sized bank in Ghana, I mean, but in Nigeria you're a big player. Are you not playing under your capacity?
So it's not a capacity issue. So FBN, yes, it's probably its largest bank in terms of many measures in Nigeria. Oldest bank, 126 years. It's a huge institution in Nigeria. Clearly, its strategy has now changed to now focus on other places. So it's now ready to play in Ghana, and we'll have the privilege of seeing some of the things that has made the FBN, or First Bank in Nigeria for that matter, that size of a bank and how strong it is. And you will see, you've already seen, I'm sure you've seen that we've changed focus, we've shifted focus, and it is one of my mandates to ensure that we move from where we are to be the bank of first choice. We want to excel and be a leading bank here, and we are on our way. And trust me, we will succeed. And
do you have targets? Do you have targets on when to achieve what? Maybe.
We always have internal targets or guidances around it, but remember, it's a marketplace, and the market players also will not sit down. There are banks that have spent. I was with Stanchart is 120 years, and I know FNB and so on, and I know everybody is striving to go to the top. So it's not like I expect other people to just fold their arms and you take market share. You only take market share when you deserve it, and therefore we work hard at it and try to be significant players at the shortest possible time. But we are not giving ourselves any such mandates as make it 1 year or make it 2 years. All we need to do is to make sure year on year we are growing significantly. Our bottom line is going up in the direction which meets the minimum standards. So once we are delivering on that and making sure we are doing it safely and making sure we are keeping the bank very safe, which is the most important thing, the results will continue in the direction that is right, and we'll get to our journey as we do. But we'll play it fairly, and we'll play it competitively, and we'll play it very ambitiously.
Let's talk about you. I read that you are an amateur golfer, and you also play Scrabble and all that. But one of the things that inspires me is your passion for youth development. Tell me, how did you develop that passion? How is it going?
Well, I guess it's my journey, because in Stanchart, let me start from my very first employer, Unilever. Unilever is very big on talent, and therefore I benefited from it, where people took interest in your career and then handheld you and corrected you and showed you what you needed to do. You're always very green and you're ambitious without having direction and so on. But Unilever is very, very particular, particularly if they identify as somebody who will go far, and then made sure, and that stayed with me. And I've been very privileged to have people who did that. Each time I look back, I know the very little difference is not basically the aptitude that people have, it's the attitude, and therefore which takes them to the altitudes they want to go to. So I know that what people miss a lot is mentorship. And each time people are willing to be mentored and guided and so on, you see that they go very, very strongly in their journey. And the people I started with at Unilever, you can see all of them around becoming CEOs in Ghana and beyond and so on, because once that culture is inculcated and once you have people to hold you, you do that. So it's always the first thing I do. make sure that people are being mentored properly and so on. It's not just that. I also believe strongly in giving back, and that's why I'm also very, very strong with Rotary. I've been in Rotary for quite a long time, and we believe in service above self. And when all is done, you must also try and give back, whether it's your talents, whether it's your resources, and give back to society as we should do, because it's even something that we expect from, no matter what religion you are, it's something you expect from you are expected to do from time to time. So I like to give a lot of volunteerism, and I like to mentor. These are the two passions of my life. Unfortunately, the golf doesn't come as much as it used to. Scrabble is easier. Yeah, Scrabble is easier because Scrabble these days you can even play online. So you use it to unwind. So almost on a daily basis, I'm doing a lot of that. These days, I've also discovered the passion of walking, thanks to COVID. So I just realized that walking is a fantastic one because it exercises you well without too much involvement in it. You don't have to, you can actually, it's a clear head thing. You can actually walk for an hour and basically do your business meetings in your head. So I've discovered that one too lately. But yes, I'm very strong on the mentorship, and I'm very strong on volunteerism, working with Rotary.
Good. You mentioned something that it's not the aptitude, but it's about the attitude you have. I want you to speak to the young bankers out there. One of the challenges we have as a country is ethics and professionalism in the banking sector. Meanwhile, integrity is the core of banking, given the service they render. And we saw that come up prominently when the Bank of Ghana started a cleanup exercise. Speak to that young banker. Tell the person how the person can prioritize integrity, ethics, and attitude.
Absolutely. I mean, recently I actually had a lecture for my alma mater, Pukwai, where I spoke a lot about integrity and spoke about some of the things we need to do around these things. And look, like I said, it's aptitude gets you in. Your knowledge will give you start you off. But it's your attitude that will eventually determine your altitude, and it's something I really believe in. Attitude meaning that striving, just keeping to the knitting, making sure you are doing the primary things that you need to do as a banker, and just biding your time, and not. I think sometimes the Generation Y, Generation Z, they want to succeed, but they sometimes want to do it too quickly, and so on. So that's where the issues come up from. Like you rightly said, yeah, we had some issues in the banking industry. When you see some of the things that went on, it was a purely a breakdown of some of the ethics of banking and so on, and there was a slight deviation from some of these core principles of banking which we must return to, and it's a job for both the employer and the employee to make sure we return to these basic things. And I tell the youth that just stick to your task. Just make sure you are doing it one day at a time. Just make sure you are working hard, because 99% of the time hard work pays. 99% of the time hard work pays. Shortcuts will always catch up with you. So just bide your time. Just employ the right attitude to what you have to do, and then eventually, sooner than later, you will see that you rise to the top.
Great. Hard work pays 99% of the time. This has been a very good discussion with Mr. Victor Yaw Asante. Victor is the MD of First Bank of Nigeria, and we've been trying to understand how it is to manage a bank, what banks think of the central bank's position and policies, and going forward, what we should expect. We hope you enjoyed it. Thank you for watching. I am Maxwell Adombila.